Now, unless you've decided to ignore the entire crypto and Bitcoin space for the last 12 months, you'd know that we've been in an epic bear market for now over 12 months. We're getting to the end of this 3 waves of pain. And I want to discuss what this looks like in today's video. What does it mean for Bitcoin in the short term? And what can we expect after this 3 waves of pain is over? Naturally, we want to see more than just a few data points from Bitcoin. So we want to have a look at how this 3 waves of pain develops on the Dow Jones with over 100 years of data, and also on the SP 500. As always, we're bringing you the most amount of objective data we can find across all of the markets and giving you that information so you can make your decision. At the end of the video, I'll go through my own opinions of how I'm interpreting this data. So stick around to the end of the video so you can get an understanding of what it is that I'll be doing in the markets based on the objective data that we've received from the charts. Something that is almost as painful as the 3 waves of pain is my terrible segues into liking and subscribing. Those links are down below, and a quick shout out to our free crypto and economic report coming out today to your email inbox. Link in the top of the video description. Absolutely free. Sign up, check it out. Coming out in less than 6 hours. Today's video is sponsored by New Brighton Capital. More on them later. Let's dive into the 3 waves of pain and how this has developed through Bitcoin and the traditional markets over many decades. Now, it's really quite simple. What we're looking for, as you can see from the chart here, are 3 waves to the downside. Typically, what we've seen in Bitcoin is 3 significant waves from a peak of a market with corrections within those waves. So like we could see from the current bear market top, that's November 2021, we had a few months down, followed by a couple of months up, again, a few months down, followed by a couple of months up, and basically another 1, 2, 3 months down with this small little break to the upside. However, we're looking at 3 significant waves to the downside. And if we've been in the market, you can start to break up how the emotions were at these particular times. We remember that the market basically went dead and dormant through these months of September and October, early part of November, and finally got that rush of bull blood into the streets. The bears were out in force. Now we have bounced away from that low, and we are into our 4th month away from that low. We are now into March, the first day of March. We were away from that low in December, January, a nice push away, and February. So now we're into March. This is our 4th month away from that low. Something to keep in mind is where the top comes in with these swings. And we'll look at that in the traditional markets as another signal as to what may come after we see these 3 waves of pain. But first, let's take a look at the previous cycle. And we had the top in December 2017. Again, a couple of months down, followed by a few months up, couple down, single month up. The market went flat, dead, dormant, sideways. If you remember that period of 2018, if you happen to be around in cryptocurrency, it was really very quiet before we got that final flush out, the blood in the street, and then the market went quiet again before we bounced away from that low. Like I noted here, as we begin to bounce away after the 3rd wave of pain, this case was very pronounced. We may still be a little bit early for that at the moment, but what we saw last time was a break of those highs. Break of many of those highs, and in this case it broke significant highs as well. Right now we have broken 1, 2, 3, 4, 5, 6 highs so far. So 6 monthly highs is how far this market has already bounced away from the low. So quite significant in terms of historic data here. The 2014 bear market also consisted of 3 significant waves down. You can see the first started with many months to the downside, 1, 2, 3, 4, 5, followed by 2 months up. Again, several months down, approximately 4 there, followed by a single month up, and then that final flush out of approximately 2 months. Market goes dead, quiet, sideways, and then it starts to break some of the monthly swing tops in this case. Higher lows form depending on which exchange we are looking at, and then the market pushes away quite quickly. Don't forget that during this period, there is still a lot of negativity, a lot of bearishness. So we could almost relate this to what occurred in 2019 as the market pushes away, and potentially what may come in 2023. That's what we're trying to do. We're always trying to trade the right-hand side of the chart, this whole black empty space. We don't know what's going to come next. We're just looking at what's happened in the past and figuring out the probabilities of that potentially happening again to a similar effect. It doesn't have to happen exactly the same, but something similar. And the similarities that we can see here are higher lows and higher highs after significant signals to the downside. In this case, what I've called 3 waves of pain. Note the same sort of thing happened again here where we had the breaks of the highs. It happened again in 2016, breaking a lot of those significant highs. And at that point, you still had many bears in the room in what I would consider is a disbelief stage. Now, of course, this is my interpretation of how the market is forming at this point, rather than the objectiveness of that exact period in time. The objectivity that we have here is what the market has given us, and that is clearly a break of many monthly swing tops, a break of many monthly swing highs, and many monthly higher lows continuing to form into the market. That's all added as confirmation to the upside. But remember that this was still underneath the previous old all-time high. So of course the bears still have a significant say in how the market sentiment will continue on from that point. It's only until we start to break the previous all-time highs that the bears are basically shot, and you can see the market really pushes away quite quickly, just like what happened after December 2020 and we started to break to that upside. It happened all very quickly, but during this period, it's really quite confusing, and this is what we typically call the transitional period. It's going to be confusing between the bulls and the bears. Now, we've looked at the 3 waves of pain in the last 2 cycles. So far, this cycle is working out pretty much to a T. The other thing I want to note here are the bull market corrections. Within these bull markets, we typically only see short reversals. It happened all the way up to the peak. You can see here, there was only a matter of 1 swing before we broke to the next all-time high, and within that swing it was only a month or 2 to the downside. Remember, this is on a monthly chart. Same sort of thing happened here in 2013, although it was a little longer. We had 3 months down, a couple of months up, higher swing low formed, and the market continued up to that final peak. Similar to what happened in 2021, we had that breakdown of 2 months. July was also quite difficult, and then the market pushed to that new high. So we often get just quick reversals, but higher lows within that period to the upside. The trickiest of them are at the beginning of the transition. You can see in 2015, the market broke the swing top and then broke under the next swing low, but it closed higher. So that was a good signal for the market to continue up. Same sort of thing happened in 2019, 2020. We had the low come in, the pandemic, nice higher close, and then the market started to move away from that point. But during this entire period, which lasted many, many months, there was still quite a significant case from the bears to say that we were going to go back down to the previous lows of 3,000 and 4,000, or even back to some bigger lows of around $1,000, which was the previous old all-time high. That is exactly what we're hearing again at this point. So this is part of the market sentiment, which then becomes a little more subjective. And basically, I'm throwing in my own experience of the last 6 years in crypto, 16 years in the market, going from real estate and the stock market, and trying to understand what the general masses do, or at least what the market sentiment does at these points in time. Now, it's not always 100% correct. However, I'm playing in the market, I'm putting money in, and I have to make a decision. So these are the sorts of feelings and emotions that I've seen many, many times before at around these lows. However, the chart, the objectiveness that comes through is the continuing break of higher ground throughout this period of extreme pessimism. Now, the 3 waves of pain isn't just exclusive to Bitcoin. It happens on all markets, and it's not always just 3 waves. Sometimes it's a little further, and we have to be open to the fact that it could go on further. However, looking at probabilities, it would tend to say that we are looking at 3 waves of pain within this cycle. But before I get further into this, a quick word from our video sponsor, New Brighton Capital. For our Aussie viewers, if you already control your own super or have already made the decision to set up an SMSF, New Brighton Capital specialize in crypto accounting for self-managed super funds. Check out the link in the description where you can book in your free 20-minute consult, and be sure to use promo code Pizzino for a $200 credit off your SMSF accounting fees. This is the Dow Jones. I've gone back to the 60s, 70s, and 80s to have a look at how this 3 waves of pain has developed on the Dow Jones. Now, these are the periods where we see 3 clear waves from the peaks, the first move down, then the rally, the next move down, and then that final move into the low. Often the hardest hitting or the most pain comes in that second or third wave, like you can see here in the 69 crash, and then again in that third wave. We saw it in the third wave here, we saw it in the second wave here, where it just continues to drag on. But at the time, the pain could seem more pronounced at some of these lower points, even though the percentage move to the downside is a lot less than the initial moves. In this last move here in the early 80s, the first move from the top is the longest here, but then we had 3 more moves to the downside before the market flips and turns around and carried on into the last stage of the cycle. Note that this was in 1982, which was a 40-year cycle to last year. We've talked about cycles, and I'll do those in future videos, so make sure you are subscribed, like the content up, because this is a lot of macro data to take in all in one video. This is the stuff that we do with our members, so if you want to learn more about that, check out the links in the top of the video description, and then also subscribe to the free crypto and economic report, where you'll go on the mailing list to get our free reports coming through to you guys. And so with the Dow Jones, these are the periods here that we can see the 3 of the waves, 1, 2, and 3. Each of these occasions has lasted about 1.5 to 2 years from top to bottom. But it doesn't always have to go like that, as we'll see. These were the 4 examples that we were just looking at through the late 60s, 70s, and early 80s. You can see earlier in the piece, late 50s, early 60s, there were also a couple more examples like this. And you can start to break down each of these bear markets, but it's just going to depend on what time frame you're looking at. So we could break these down and look at 3 waves within each of the one wave. Now, this is not Elliott wave counts whatsoever. We're just looking at pushes to the downside in how these swings come about. Now, with these ones in the early 1960s, this peak went higher than the previous. So you could almost argue that this was 2 waves. You also had 2 waves here before a higher low. And in that case, these periods are quite short. You've got about 9 months in this case, 7 months in this case, before a higher low forms. And the higher low is the piece of the puzzle that we are looking forward to next. So far we've gone back over 60 years of data for these 3 waves of pain. Looking back at the current cycle, at some of the more recent data, as people love to reference what's happened in the most recent history, you can see from our GFC peak to the bottom, again, 3 significant moves. Of course, breaking it down, you can argue that there was an extra little move in this piece here, which could give you that 4 waves down. But at the end of the day, we're just looking at where the market really started to break down and from which point that was. And so in this case, we're looking at around 17 months in total. Now, throughout the bull market, there are still cases of significant waves to the downside. As I said, it depends how you want to break them down. Looking at 2010, 2011, 2015 into 16, you can see there were just 2 waves because these were much shorter periods, lasting 3 months, 5 months, 8 months. This one here could be broken down into 3 waves or 2 waves of the downside pain. Either way you look at it, we still ended up with a higher low and the market pushes to the upside within a shorter span of time. So this brings us to present day and what we are currently seeing on the Dow Jones, and the same thing on the S&P and the same thing on Bitcoin. What we've seen recently in 2018 is a couple of quick swings to the downside. Now, this is not very significant. However, we do have a quick pandemic flush and the market pushed away from that. Now, what we're currently seeing is support on previous old high levels. We're seeing 3 particular swings down. And if you look at where these highs are coming in now for the monthly chart, they are breaking many of the previous months as well. Now, of course, I'm not saying that this is a 100% guarantee that we will not see any further downside. However, if we like to swing the probabilities in our favor, this would typically say that we won't see further prices below the current lows of September and October But if we were, it probably won't be too severe to the downside. So I'm keeping those options open because we are investors and we do not have a crystal ball to this side of the market. We only have probabilities and how we choose to interpret the data that we are given. And in this case, I can clearly see 3 swings to the downside with a pretty strong rally out of those lows, breaking previous monthly swing tops and monthly highs. All the while, the market has come all the way back to previous highs, the pandemic or pre-pandemic high, the September 2020 high, which was just before we had the second lockdown stage and then more money printed in to the economy. So we've come back and tested some of those levels with a pretty significant bounce out. Now, like I said at the beginning of the video, I've looked at the data, I've given you my opinion at the end of the video. It's now your turn to go away and figure out what you think is going to happen next. Are we about to plummet to new lows past the significant lows here of September and October? Anything is possible, no one is stupid. Or are we going to put in a new higher low, which can still come quite close to where those previous lows were in October and September of 2022, and then from that point start to grind our way to new higher prices later this year or 2024, 2025. Let me know in the comments section down below, and if you did enjoy the content, like, subscribe, bell notification icon. Don't forget we have our free crypto and economic report coming out today. Plenty of massive stuff there, and it's also further explanation of the 3 waves that we're looking at here for Bitcoin, plus real estate and DeFi within cryptocurrencies. I hope you enjoyed that, guys. Found a ton of value from it. I'll see you at the next one. Stay tuned. Videos are popping up here on your left-hand side. I'll be back again tomorrow. See you at the next one. Till then, peace out.